Okay, today we're going to talk about one of our Forex lessons. It's called multiple time frame analysis, and it's for Forex traders. And this is on the Forex Early Warning website in our 35 lessons package here. 35 Forex lessons illustrated articles. So multiple time frame analysis for Forex traders. It's a very powerful way of analyzing the charts, individual currencies, preparing trading plans. But it's underutilized because I think Forex traders really don't understand it or have mastered it. But we're going to show you how to set up the indicators, and we're going to show you how to approach analyzing the Forex market and 28 currency pairs with multiple time frame analysis. So with multiple time frame analysis, you inspect the trend indicators, some simple trend indicators, and you always start with the largest time frame and you work backwards through the smaller time frames. There's some background information right here. If you click on these two links, you'll see that multiple time frame analysis has been used for many years, over 40 years, and it's been used mostly for trading and analyzing stocks, indexes, commodities, etc. But in this article, we'll adapt multiple time frame analysis for the Forex market. So if you want to set up the indicators for multiple time frame analysis, here's what they look like. They're just simple exponential moving averages. You set your simple exponential moving averages up, really basic simple indicators, but you set them up by individual currency. For example, you'll set up all the JPY pairs side by side, then you'll set up all of the Euro pairs side by side, all of the USD pairs side by side, US dollar, all the Canadian dollar pairs, etc. And so you have an idea of what each individual currency is doing. So these indicators here, if you click on this link right here, the trend indicators, it'll take you to this page. And these are very simple exponential moving averages that you can set up on any MetaTrader or any other charting platform that Forex traders use. So the mechanics of multiple time frame analysis are simple. You always start with the highest time frame, which is the MN time frame, and you work backwards through the time frame, and you're going to get a lot of information. Even if you look at the four biggest time frames right here, you'll have a pretty good idea of what currencies are strong and weak, what currencies pairs are trending, ranging, and then you'll have a real good idea of how to start preparing your trading plans. You can take the readings from the higher time frames and the direction, and you can fill out one of our tools here. This is called the Forex Market Analysis Spreadsheet. Let me take you over to that link here. It's a Forex Market Analysis Spreadsheet for 8 currencies, and what you do is you just fill out the direction. Here's all the USD pairs. You fill out the direction, and it gives you a grid that tells you what currencies are strong and what currencies are weak. So you can take multiple time frame analysis for currencies to the next level. So when you're drilling down the charts and you're looking at the charts and applying multiple time frame analysis, what are the things that you're looking for? One of the things you can do is see what pairs are trending. This is an example of a pair that's just trending. It's a generic time frame. It could be any time frame, but you can see it's in an uptrend on these time frames. You got increasing tops and bottoms here on your bar chart, and it's in an uptrend. And so this can be if this is the H4 time frame or larger, D1, W1, you'd be looking to trade this, and you'd be looking to buy this pair. You can determine what pairs are ranging. You can determine which pairs are sideways and choppy, support and resistance breakout points. You can determine all these things here. It's just a large amount of information with multiple time frame analysis. You start with the largest time frame, you drill down the charts to the smaller time frames, and you're looking for all of the characteristics, including support and resistance levels, that you can find in those charts. So this is a long list of things. It does take time to get good at drilling down the charts. And if you drill down the charts every day for a pretty good period of time, several months, you'll start to get the hang of it and be really good at analyzing the Forex market. Now, since multiple time frame analysis was originally designed for stocks, indexes, and commodity charts, you have to make some minor adjustments for using it for the Forex market. So one of the things that we always suggest is to group pairs together. So for example, if you're analyzing the USD Swiss pair, just pick any pair at random. You would have to analyze several US dollar pairs, and then you would have to turn around and analyze as many Swiss franc pairs as possible, so pound Swiss, euro Swiss, Aussie Swiss. And you take the currency pair and you split it into two different currencies, and you start analyzing what the US dollar is doing, strong, weak, or neutral, and the Swiss pair, Swiss franc currency, strong, weak, or neutral, and you try to make a determination as to why the US dollar Swiss is behaving the way it's doing. You want to know why it's behaving that way. You can also enter trades with multiple time frame analysis, and you can also make an improvement on your trade entries here. The basic rules of multiple time frame analysis say that if you want to buy or sell a currency pair, that the smaller time frames have to be in agreement with the larger time frames. So if you drill down the charts on, let's say, the Canadian dollar pairs, and you determine that the Canadian dollar yen is starting a new trend on the D1 time frame and pointing down, then you can use our real-time tool called the Forex heat map to assist you with your trade entries. This is called the Forex heat map right here. Okay, so if the Canadian dollar yen is starting a downtrend, and you see a signal like this, which indicates that the Canadian dollar is weak, the base currency is here, and then it's a cross currency here, so it'd have to be two colors. This is a sell signal on the Canadian yen on our tool called the Forex heat map. The Forex heat map is a great tool. It's right on our website. You can go check out more information about it right here. So you have a sell signal on the Canadian yen, and because of your analysis, you know that the Canadian yen is also starting a D1 time frame downtrend. So if you have a pair that's trending plus a sell signal, now you've got yourself all the ingredients to enter a trade safely. It works the same exact way on 28 pairs. These are the Canadian dollar and New Zealand dollar pairs. It works the same way on 8 currencies and 28 pairs. So you can take classic multiple time frame analysis and use things like audible price alerts, the Forex heat map. We even have a mobile app that tells you when to go check the market, and all of this, you can do all of this and still obey all of the classic rules of multiple time frame analysis to improve your trade entries. You can enter a trade using multiple time frame analysis with some of these other tools like the Forex heat map. So in this article, we explain how to take multiple time frame analysis and adapt it for traders, and everything you need is here to get started. We take you through how to set up the indicators, how to enter trades with multiple time frame analysis, what to look for in the charts. It's a great lesson on how to analyze any currency pair, or the entire Forex market. So this is in our 35 Forex lessons. This is lesson number 11, and this is multiple time frame analysis from forexearlywarning.com.